Let's get to one of our top stories. A late addition has been made to the Republican tax bill that would provide a multi-million-dollar windfall to property owners such as President Trump. The change allows real estate businesses to take advantage of a new tax break. Now, observers say its beneficiaries include, well, the president, who's claimed the bill won't help him financially. Vice President Mike Pence is said to have delayed his trip as well to the Middle East, just in case his tie-breaking vote is needed to get the bill through. Let's widen out the conversation, see how this impacts the broader story. We're now joined, of course, out of Singapore by Vishnu Varathan, the head of economics and strategy at Mizuho Bank. Thanks for coming on the program. Look, the cost of this tax plan estimated at $1.5 trillion over 10 years. Sounds like a lot. I want to know from you how much of a real impact it's going to have on economic growth.
Well, our earlier estimates suggested that the impact to the U.S. Economy would be to the tune of 0.2 to 0.3% of GDP. Of course, these numbers are very difficult to firm up because you make too many assumptions about what firms would do with some of the excess cash and how that's going to multiply through the economy. But one of our main takes here is that if the tax plan goes through, then at least the U.S. has got the benefit of the so-called Goldilocks effect. You would get a little bit of the GDP boost, but from at least the early indications of the Fed, they've suggested that they're not going to react too much to this. So you don't get the attendant policy tightening that could come through from the tax plan. So that would be the ideal case, which would probably see through some U.S. optimism that cascades down into global asset market optimism going into the second half of 2018, maybe early 2019 as well.